Japan has just pulled off a new feat and it is crushing it. In fact, Japan's market is looking so strong right now, it's becoming the darling as China's market is completely falling apart. The Nike overtakes the 1989 high to hit record as global funds pour in. Japan's Nike 225 stock average, equivalent to our S&P 500, their major index, reached a record high, joining Wall Street stocks and pushing into uncharted territory. So for a long time, historically, we've known that various global markets have gone up and up and up. And like, if you're a long-term investor, you'll find this was not true about Japan. I don't want to get really into the nitty-gritty of it, but it has to do with really their monetary policy. And we haven't seen a high since 1989. Imagine being invested in the Japanese market and you're like, hey, I'm going to retire on this. It's not till now that they hit a new high, but it is ripping. And like I said, in terms of percentage gain, everyone's looking at that new shiny object and completely forgetting about China. Global funds are pouring into Japan, making the nation's shares into top performers over the past year. The weak yen is offering a further tailwind and boosting Japanese exporters, while the Tokyo Bourse push to improve a corporate governance and raising expectations for more shareholder returns. After some recent consolidation, Nvidia's earnings beat is just the perfect catalyst for Japanese equities to reach record highs. Not just the US hitting record highs, Japan is joining the party. And structural tailwinds from geopolitical to corporate reform, as well as a weak yen, continue to suggest that Japanese equities is a story where macro meets momentum and a peak is still rather far. It is rippity skippity doodah. Japan shares open new chapter as the Nike reclaims the 1989 peak.
We've taken out the 1989 peak on the Nikkei. You know, this takes me back to the days of Walkmans and my childhood, Paul. But the markets have more important things to think about. I mean, this has been tipped over the edge, if you like, by Nvidia, but the founding blocks for this laid, 10 years.
Quick pause there. Do you realize how impactful Nvidia is that it didn't just shoot the US market to a new high, it shot the Japanese market to a new high? All those memes of like, oh, Nvidia, like kind of like save Nvidia, save the world, like that type of vibe. That's what happened. The world is being elevated because of one company and the new explosion in AI, data centers, and crypto, which all is basically being pushed forward by Nvidia. Let that sink in for a second. That's absolutely crazy.
Ago, in some cases, when you're thinking about reform, what do you make of the new records in Japan?
Yeah, well, it seemed almost a matter of time or an inevitability that we were going to get there, given the momentum that we've seen in the Japanese market this year, seeing inflows coming both from abroad and from domestic investors, which have a new sort of retirement savings plan they can put money into, which is getting them more excited about the stock market as well. I think, you know, kind of some elements of the rally have been long-term reforms that have cleaned up the corporate picture somewhat, have been very encouraging for investors, brought in active investors, got money flowing off balance sheets that have been held up. We had things like the endorsement of Warren Buffett as well, giving the market that extra kind of lift and boost. And now that inflation is catching on in Japan, and actually we discovered that companies have pricing power and are able to raise their prices without hurting their margins because there's still demand there, the rally is continued to gather steam. And so, you know, a lot of the strategists are saying this is a stopping off point, but this isn't the end of the rally. There's scope for plenty more gains from here. Japan is still under-owned relative to global portfolios. The alternative over there in China isn't looking so hot either right now.
The overall value of the Chinese market is considerably more. It's about 4.5 times what the Japanese market is. But right now, people aren't looking at the magnitude of the value. They're looking at the percentage gains. And they're seeing that the Japanese market, percentage gains wise, is ripping, while the Chinese market, percentage gains wise, is getting its throat ripped out. China quant quake resembles the 2007 US meltdown, according to Man Group. I've been covering this a little bit recently, but we know China's market is completely in turmoil, and so is its economy, the shadow banking, the real estate crisis, geopolitical discontent, the population issues, like the list goes on and on and on. And it blows my mind because there's a lot of well-respected people within Wall Street for forever now, for the past couple of years, we've been like, you gotta get into China. You gotta invest. This is a great emerging market. Guess what? They were 100% wrong. China's equity rut a few weeks ago was exacerbated by quantitative funds stampeding to exit positions, akin to an 07 episode in the US when such investors suffered an abrupt meltdown that roiled markets. China's intervention to stem the turmoil also caused significant market dislocations, compounding the losses for these funds. Their intervention is some of the craziest stuff we've ever seen. So they basically straight up banned short selling, and now they're banning selling in the first half hour and the last half hour of the day. These large funds, you cannot be a net seller. I'm not talking about shorts. I'm saying them getting out of their position. They're like, you can't do that anymore. That's how bad it is. This market is hemorrhaging, and the government of China is stepping in, trying to do anything they can to give this market a little bit of CPR, and it is not turning out well. Crowded positioning and high leverage contributed to the Chinese quant woes, resembling the events of August of 07, when a number of US model-driven hedge funds saw similarly sudden losses. China's recent quant quake has revealed systematic financial risks as a series of interconnected events and highlights the perils of crowding and leverage. So that's a little bit of your global update. Japan crushing it, China getting crushed. And in my personal opinion, and hey, take that with a grain of salt, like I said, my crystal ball works as well as yours does. I would predict that this trend of China's market down, 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 and Japan's market up, 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 I think that at least in the short to medium term, that will be a trend that I would predict is going to persist, but obviously time will tell.